All right, back on your morning wake up, 1320 WILS. September, the month of September, which we've just passed into the rearview mirror, if you're an investor, even a small-time investor, you have to be impressed with the numbers out of the stock market. When will it end? When will it end? We keep asking that, and the answer is so far, it's not. We're talking about not a volatile month. Coming out of the summer, you thought maybe it would be? No. Maybe the daily tweets from the president, there would be some hunkering down. No. I worry about, the Warren Buffett advice is always, be greedy when others are fearful and be fearful when everybody else is greedy. And right now, it's still the bull market. It's rushing and more bump ups. So should we be concerned? Let's talk about the way the market has been rolling with Daniel J. Geltrude, CPA, MST, on the other end of our line right now. Good morning.
Good morning, Dave. How are you?
I'm doing good. For investors, September, it was a bump up in the S&P 500 for the year. The S&P up 12.5%. Robust. This is robust.
Absolutely. Last month was the least volatile September on record. The daily range was less than 0.5% on average, and it's interesting because September is when we usually see volatility. So with very little getting done in Congress, you would expect the market to react negatively. With the threat of war with North Korea, again, you would think the market would move.
The market was like ho-hum. The market was ho-hum when they were going back and forth with the tweets and the press conferences, Donald Trump and Kim. It didn't care.
Absolutely.
Yeah, it didn't care.
With when you look at it this way, Dave, with so much instability at home and abroad, you would normally see that reflected in the markets. How about the hurricanes? And it's just highly, highly unusual what we're seeing. We're really living in extraordinary times right now for many reasons.
And some of those reasons, you're right about the hurricane, especially where it hit. And affected in Texas the possibility of refineries shutting down for an extended period. So, oil stocks, this will take a hit here. There'll be a slip over from the energy sector, a ripple on the pond. It was like that rock that someone threw in a pond just disappeared under the surface, and all was placid again. I don't get it. Tell me why we're not seeing more reaction from the market, because that's step one. Why no reaction?
I'll tell you why. I believe it's because investor confidence right now is so high, and that there's an expectations that things are going to continue to improve. I think that's the core of what we're seeing. And let's also not underestimate the impact still of the Trump bump, because even with the failure of repeal and replace, tax reform is expected to happen, particularly the lowering of corporate tax rates. I think we're going to get that. I don't know what the package will look like, and I believe that's what's driving the optimism in the market with investors. Because otherwise it doesn't make any sense.
Is it okay, so you made a great point there about the tax reform package. Is this like a pre-buy-in to that? In other words, the big bump you would expect if and when that passes and gets signed, is that happening now? We're going to reward you now. This is your salary draw versus commission. The commission check won't be as big because we're going to take care of you now. That's what we're doing right now. Am I off base there, or possibly is there something to that?
I don't think that you're off base, but I really believe from what we're hearing out of Washington, everybody is talking about that we need tax reform. Of course, there's going to be plenty of arguing back and forth about what exactly is going to happen.
Oh, yeah.
But there is no question about the fact that we are not competitive with corporate tax rates. Everybody realizes that. Now, the president's proposing 20%. Originally, he was saying 15. 35 is where we are now. We're going to land somewhere in between, probably closer to 20. And I think that's a huge difference maker across the board. I really do. And I agree. I think that's what investors are banking on, and the market is rewarding everybody up front.
We started here over the last year. Where were we, Daniel? We were right about the 20,000 mark, pretty close coming out of the election.
1 year ago today, we were in the low 18s.
Okay. So the calendar year, though, from the calendar year, there's a chance. I mean, there's a chance that if it looks like they're going to get tax reform done, could we bump up to 25,000 on the Dow by the end of the year, calendar year?
I think so. If tax reform actually happens, and I'll tell you, I mean, maybe this is pie in the sky, Dave, but I think that if tax reform is going to happen, and how about this, it actually goes retroactive back to January, I think we see an explosion in the market. That is the perfect positive storm for the market. That
combined with some unilateral, what you would call executive moves on regulation here, lose two for everyone. There is talk that could help unleash what he said it's like rocket fuel for the economy, and that isn't necessarily hyperbole if you look at possible numbers.
No, look at how the GDP is already growing since Trump took office. Whether you like him or not is irrelevant. Let's put the personalities aside. Let's talk about results. Donald Trump was elected to move the economy more than anything else, and he's doing it. A lot of people on the left aren't giving him any credit, but he's actually doing it.
Yeah, so when he was talking about 3.5 to 5 points, maybe higher, I mean, I didn't laugh on this show. We had people on who said, I think that's really kind of extreme. It doesn't seem extreme now, looking at some of the other economic pieces, that he could actually hit as possible. And if he does, it remains to be seen how that will play out nationwide. But you got to think that as far as employment, as far as wage, other things, that there are some really good things that could be happening here down the road economically. And that has nothing to do with whether you agree with the style, tone, substance, content, or policy of President Trump. It's just watching how the economy is reacting, and that's a separate, visceral thing, is it not?
I agree with you. I think that people are actually segregating, shall we say, Trump's tone in tweeting and the other things, and what their expectation is for what he can do for the economy. Two completely separate things. And what else would make sense, Dave? Because we're seeing that's how the world is reacting. So we have protests going on all over the place, but yet the market continues to surge. GDP going up. The employment rates or unemployment going down. I mean, the proof is in the pudding.
So you have people literally who would say, look, I'm just calling it the way I see it, who are putting, #resist on the end of their social media, and then they'll open up their quarterly and go, wow, I'm doing really good. This is great. And they don't see that there's
Right.
I used to hide mine in the drawer from 2009 to 2000. You know what I'm saying? I didn't want to look at it, but now you're going to have people saying this is great, but at the same time opposing the president on any number of issues, and I don't know that people will say there's a problem with that. It's just kind of where we are in 2017. Where can we find you online?
You can find me on my Twitter handle, which is @DanGeltrude, and website dangeltrude.com, and also geltrude.com.
Great to have you on today to talk about this very much. Thank you.
Thank you, Dave.
Morning Wake Up continues. Daniel Geltrude, 1320 WILS.